Hi, everybody, and welcome to this 37th weekly market analysis. So, the last one is to be also a special edition as the previous one, as I mentioned to you the last week before that we recorded that. So, my name is Francois Ablé. Hope that you're doing very well. Today is the Monday, 31st December. So, the Saint Sylvester is today. So, this is the last day for the current year, which is 2018. So that's why I present to you again a new the last weekly market analysis for this year, but it's also a special edition as we done before, like the last Monday, the last week. Okay, so let's going directly to the disclaimer and just starting. Today we're just gonna talk about like a technical analysis, so make a projection and see what happened to the 2019, like what we probably have expectation on the financial market on the major assets, right? So disclaimer, futures equity, ETF, option, CFD, and other derivative used in trading have great potential reward. You have on the friends on the screen. So you need to know that trading is not the game, fortunately. So please be careful with your money. And if you have a question about for the wealth management, I recommend you to take a meeting with your special advisor to that. And if you want to know how to, doing in yourself on the financial market to trade and to have like kind of a vehicle of money or leverage, you can take a look on the website for the GSTA, which is Global Street Trader Academy .com, right? And we offer all the framework and also training for be successful on financial markets. Okay, so I know that you master this disclaimer. So weekly market analysis, December, the last one, so number 37. So a very important financial broadcast for today, as also the last one. Um, for the technical perspective and market projection, here is the summary that I made for you. We will going directly to see on the charts, but this is all that we have to discuss today. So I detect a monthly bearish engulfing. We see also a bearish quarterly and breakout neckline threshold. So this is all the like the summary in one word for the technical analysis. I would like to going first to the technical analysis, and then we will get back to see that for the to finish before this financial broadcast. So let's jump to the technical analysis vision, right? So 2018 has been a very difficult market, right? A difficult year for the US market, because we're starting like this big vertical line here, like show what's the market starting. So we're starting the market, and then we're starting the year of 2018 here, and we're starting with like a massive green line, but it was like on the top of the ascending channel, which is including the bull run since the 2000 since like 10 years, bull run 10 years, and it was starting at the top for the 2018 here. And then we have a couple correction, and after a recover to doing a new high test. So it has to be like close to the September, like to be like precisely to the 22nd September. And then the market starting to collapse, and after is doing kind of tweezers, and after again it restarting to collapse again. So basically we totally collapse until close to the 30%. Even the market has rebounds here on the support, like the ascending channel support here, we rebounds for like probably 7%, but we retain that we down for 35%. So if you do just a simplistic calculation, 20 like 30% minus 7% for recovering. So we are still down we're still down for 22%, right? So this is very critical pressure on the market, and does not like send a great message for the 2019. Unfortunately, is a kind of neutral or bearish market looming on the financial market, because as I mentioned here, this is a sell-off pressure pattern, right? I just putting right there. So you see here, this is a sell-off pressure pattern, because we're going back, we're going down after we do a recover, but not a great recovery. We just like the market show us that the buyers still want to be in a game, but they don't have like a great like enough strength to pushing higher the market. So then we fell around the average level here, which is representing at that time like the average for the volatility, and then we collapse again. We break all the previous low, right? And it's representing that the neckline for the pattern that we you know, or everybody knows that it was like, we can interpret it to the double top. So it's the kind of double top failure, like, which is making successively, and after the market break the neckline, and we, if we close tonight like on the 23rd, which is the last day for the 2018, if we close below 2610 or 2530 here, I'm expecting to be probably neutral or also be bearish on the on this new year, because we know that the recession supposed to coming on the 2020. This is like the like all the economists and specialists on the financial market are agree on this year. You probably coming at around the second quarterly, the second quarter of the on the 2020, but it could be also anticipated, right? So that being said, we probably doing like a collapse. Before that, we starting to talk about the recession or the financial crisis, right? And if you duplicating like the distance technically between this ascending channel to, and you want to report to that, we probably get some kind of objective here around this neckline. So I will draw, let me duplicate this one. So if I duplicate that and I putting just there, it could be around there, right? This level here. I can duplicate that this one too. So we could have this kind of objective, right? Technical objective. So this is like the theoretical objective that the S&P 500 could make. So we break this level, this crucial threshold, and we close below that. So we can doing some like in back, like a pullback here, just to test this level here, or probably clean all people which is positioning here to the sell, like on sell position here. They probably put some like a stop loss here. So the market, if the market close here, you're probably going back to test this level again here, and then after fall off until this level. This is my particular scenario, right? So I'm not telling you that that's you have to be, but mine personally, it's my expectation, right? Because we pretty sure that the bear market starting to ending, right? Because we done the 30% fall off that we expect, that everybody expect. That we also rebounds on the bottom for the ascending channel, and then we rebound, because in stock market, as I said as I mentioned to the previous video, we buy each low, we buy each support. This is a statistically an empirical observation. So they bought it. They bought the this low on, which is coinciding to the support, and we recover for 7%, right? But we didn't. If you not reintegrated this threshold level, crucial threshold here, and we close below that. That being said, that the market still bearish. Don't be trapped. I'm not. There's no. It could be have like a probably that's a you call bull trap, right? So people, if they see here, because I know that it's very tempted, because um, we evolved to the ascending channel. We they bought the bottom for the ascending channel, so we're still bullish until this 9-year bull run. So we still on the ascending channel is still going up, right? But here is to 22% sell-off movement. It's very important, right? It is very messed up signal. If just we were just doing some like a neutral variability here, and we close, if we close below sorry, above this green line threshold here before the 2019 year coming, then I will be probably neutral, because we reintegrated which were a valid signal, very strong signal. But if we close below here, don't be trapped. The market will still continuing to going down, right? So here is my scenario for the S&P 500, right? So if we close below here again, I'm expecting to have just a bit correction to the begin to the 2019, and then shorten again to and fall off until like the previous level, like for the next support here, which is representing the year where the the American president, Mr. Donald Trump, coming to the for the government. Okay, so this is my scenario here for the 2019 because of that. Okay, let's go now for the euro dollar. I just like study the major curve for the forex and also on the financial market. So euro dollar here. Euro dollar will be probably for me. So again, we're starting this year here, right? This is like the beginning of 2018, and we're starting to going down to we were bearish. We're starting the previous highest point was in $25, right? And after that, we starting there and we going down. So we're doing here some of as I already mentioned, is look like some like an inverted yield curve, right? As you see here. So we're starting on the top here and we're starting to going down. But we didn't like break the previous lowest point, which was $12, right, for the euro dollar. And we stuck on the $1320, which is like some of an inverted polarity threshold, which like the previous resistance here becoming a new support. And we are analyzing the market on the monthly, right? So as you see here, this rectangle here representing 12 candles for this year. So it's annual vision right there. We can go into the weekly, and this is representing like a 52 candle of the on the week, right? So we're not going until the previous lower. Here we stop just there, and then this level here, which were the resistance, playing out a role for support. But in monthly, as you see here, we saw that there's a lot of strong, like the fighting between the buyers against the seller. but it's still that the buyers still have like a pressure to like strength to pushing higher the market, right? So that's why if we go into the monthly, which is very important to take a look, we detect a nice indication, technical analysis, like people used to be good in the this kind of pattern. You see here clearly that if we close like this after this trading day session, we probably observe some of like a morning doji star, right? Which is kind of a solid bearish pattern, a doji, and then a green line here, right? So it's a free candle. So the free candle pattern, which is representing the morning doji star, and it is doing that for the close on this line, which represented some inverted line for the support, right? So that's why I want to make sure that people understand here, because we're pushing higher. The doji make here a clear indication, because of this solid red candle here, we does like we does going to see which way the position here was probably be supporting the fact that the market could probably going pushing higher, pushing lower, sorry. And so we break this level, but we didn't close below that. We closed above this line. So this one was like a great signal that market will probably going up, right? So that's why I said if we close like this if this pattern still materializing after this day, which is the 31st, so the last day for the 2018, I'm expecting to have a doji morning doji star. So which is, and it's a pure usually on the after the end of like a bearish movement. So it precedes a bearish movement. So we got like a probably 11 bearish candle, and we're doing this one. So I'm expecting to be up, right? And this one is also based on the context of the economy. We already discussed the context and the macroeconomic context for this year. We're expecting to have a dollar a week. So that's why if we take account the fact that the dollar will weak, it's will be lift mechanically the euro dollar, right? So I'm expecting to have this kind of movement for the 2019. When the like we will see for the bond and the treasury product, but when the market is still like an uncertainty based on the global context, which is not good for the good looking people going to the safe asset, right, as a gold, or also invest to the forex, right? So that's why I'm expecting to have a bull euro dollar for the 2019, right? So this was my expectation. So now take a look from the bond market. So bond market, we're studying. If I take a look here quickly, so the spread between US and EU, right? So spread US. So US 10. Oh, sorry. US 10 year between the EU, the bond. So it will be the Germany. All right. All right. So I prepared yesterday for you the this fantastic chart, right? And I do again the same game. I separate the different year, precede like all the movement on the what happened on the financial market, right? So we don't have, unfortunately, other like data for here, but we're starting. Let's say that the market, we're considering that the market was up, right? Was up here. And this level here representing the top for the before the financial crash to the October 87th, as you see here. We done that for a bit, so we have a collapse of the black, the Black Thursday for the October 87th. After that, we just have a recover, and in 1994, we got some like a collapse on oil, which is translated to the bond crash here, which were August to November 94, right? So we doing like a bearish movement. After recovering, we go into the tech bubble between the March 2000, so like a beginning of 2000, with like the .com era and internet, and it's been 2 years, right? So we were to top to the previous top, which were close to the 2.82% or 3% level for the spread between. So this study that I make here is a kind to show you what happened when the market go into the recession between the mass debt on the United States and the German, because German is like the most powerful country to the Europe, and United States is the most powerful market to the America and the world too, right? So we compares together the bond mass and what would be like the impact, macroeconomic impacting. But we just take here a look, which is just the technically. I don't want to go into the all the detail, because I already discussed to the previous financial broadcast last Monday, right? But here we were the top. So each top that we made here, the lesson to understanding that each top that we made here, we have a collapse. And when the collapse happen, that being said, that the market going to the recession or a financial crash event or something bad for the economy, right? Because we compare S&P between the DAX. The DAX felt like guide the European market as the Eurostock and the CAC 40, and the S&P drive the entire world on the market, even including the Nasdaq and also the Dow Jones, right? So we got the tech bubble here, close to the this red line for the solid resistance, which is starting to the 87, right? We got the tech bubble, so crash. After we have a recover to after we standing again to the September 2007 to the February 9, which was the mortgage debt collapse, which is translating to the financial crisis. After here, so we're doing also a low. After we recover again, and take a look here. Guess what? We fell again to the same level, and we will starting the new year for the January 19th until the 2020, which we're expecting a recession, right? So there's no coincidence, right? It's just like a cycle. It's a cycle. So we end of the cycle. So I will really zoom clearly that we see here, right? Look, the candle. Is it look like a dark clover, right? This pattern here. So we got like a green candle, and after we got a semi body to the candle after a little bit weeks. I will zoom like to see here, because today we just talk about technical analysis. We have a candle here, like a green candle, and after we just starting below, just below, little bit below the green candle, we're doing a little wicks, and we close the candle, the red candle here, to the middle, to the previous green candle. So this is a perfect dark cloud on the market, and is happier below the resistance, which is very critical and very important, right? And guess what? After a massive bearish engulfing here. So that being said, to be clear, for the 2019 here until the 2020, I'm expecting to have a same movement that we saw and we studied the previous here, right? Because it's a cycle. We're starting here, collapse. We recover a bit, we collapse. We're doing low a high point on the tech bubble march, we collapse again. We're doing that, we collapse, and so on and so forth, right? And this is now the time after a 10 years bull run, because when we are in expansion on the markets economically, people are great confidence with the economy, so they can borrow lots of money, including the context for the QE, which is the easing for the money, so they can take a debt to produce and then to make money and provoking the inflation, because you know that inflation is not good with the bond markets. So that's why the fact that we do acceleration here, we stop to the 3%, which was like the major resistance to the spread between United States and the Europe, the EU. So that's why Carl Icahn, the hedge fund manager for the Bridgewater Associated, it said that the European market will probably goes to the before the United States to the recession. That's the explanation right here, right? Because the spread between the most powerful country on the debt on the which is United States, and the most powerful country for the Europe in terms of the bond, because the bond, like take a borrowing money on the Germany market is more secure to borrow money to the French market, or also borrow money to the Italian market or the Greek market, right? So that's why we compare the spread between them. And the spread said to us that the recession which we're coming to the Europe first, because if the bond mass starting to increase for the Germany here, after that it will put a pressure on the spread. So the most time that the like the 10 years on the spread for the bond yield like a spread continuing to going on the top. That being said, that people prefer to put money on the United States, and when the market still continuing to going down, that being said, that people will be probably take a look on the European markets. It's just the transfer of money. So that's why we study the spread. So we're expecting to have this movement, which could be a consequence for the recession looming, right? Okay, so let's finish now with the spread between oil and the gold, right? Right. This is spread between oil and gold here. I think this is that. No, it's not that. I have already prepared the chart for that. So yeah, okay. So to finish this financial broadcast, which is here is the gold. So basically, this is my scenario here, right? So we have kind of a banded chart here. Why the spread between gold and oil and gold? Because oil is the most demanding minerals, or if you want, like the most demanding energy. It guides the global growth on the financial markets, right? So oil is kind of inflation, is mentioning some, like is meaning like the inflation. When the market is on expansion, we need to have oil for on any activity sector to make like the growth, the global growth. But the gold is the most secure asset that people would like to own in the this kind of condition of the market, this uncertainty condition, right? So that's why you see here that the gold was the gold is like on 1280, right? And because people trying to own gold. So this study here, it's based on the dollar, right? Because the oil, it's based on the dollar, and the gold also is based on dollar, right? So the spread between oil and gold, which means that when the dollar will be lower, if the dollar is starting to get like weaker, we will see the gold going up, and then the oil will be going down, right? So here, the spread between them. This is my scenario. So based on the previous rounding and bending movement here, we starting to do a kind of neutral zone here. We were stuck here, and after we probably going to the going down. So that's why I just frame here for you this pattern here, which is the bearish Marubozu. Bearish Marubozu, I know that pretty much of you guys know what does mean Marubozu. Marubozu is like a Japanese terminology, but it's just meaning that the pressure and the sell-off guys on this market are there. They really want to going lower. So people will starting to get rid of the position. So if you take a look here from the lower from the lowest point until the highest point, so it's based on because we are monthly, so it's a 12 candle. With just 3 candle, we retrace all the 12 candle that we made here on the previous movement, right? So that being said, just 3 candle beat like the previous like six candle, or no, 9 candle, right? Because we are 2018 right now, so it's a 12 candle because we have monthly. So we have a 3 bearish candle here, and then we have also 9 green candle here. So we probably swallow all the previous 9 candle here, so which is very important. So we retrace all this fantastic movement here where the oil was very undemanding, but based now on the expectation and based on the perspective on the economy, as I mentioned to you through the previous financial broadcast from the last Monday, we already discussed about like the bad perspective on the oil. So that being said, the spread between oil and gold, if we follow this logic, this fundamental logic, I'm expecting to have the spread continuing to going down. That being said, the gold will be still like undemanding because we have an uncertainty market condition, and the oil also could go to test starting to test a low like the 39 or $40 low, and probably doing a pullback until like the 65 level, and then after coming to going back again. So we can take a look quickly to the oil, what's happened, but basically is that the pattern that I draw for you. This is my expectation. So I'm just waiting about that we break this level, and then that being said, the gold will be explode the market, right? So which is representing for the gold probably to the $1370 dollar, like 1,370, which is like the major resistance on the gold. And then if we break that, we probably accelerating to the 1,400 and higher also, right? So here is my scenario here. So we can take a look quickly to the what's happened to the before to finish this broadcast to the gold. This is my just draws funny that I put here just for my study. I will like erase that. So just to show like what's the potential scenario that I just already talk about. So here I can draw the right. So this is the resistance here, and I just took the close, right? So the market could go into until here, right? Test this level, and then after rebounds and going to test like the 65 level somewhere here, and then we come to going back, right? And this level here was we very overseeing some level here. So the 41.92. If you take a look quick, like very deeply, we see that we there, right? We rebounds there, like on this level. So that's why I would like to show you. So you see here that the oil. That's why most of analysis and most of economists said that they see the oil rebounds until the $70 per barrel or the 65 per barrel. They could have right, but mine personally, I'm expecting a lower price for the oil based on the when we get into the recession officially. So that will probably for the 2020. So we could going lower again or probably stay here and after going up because we are 30 again. We are 31st today, so it's the last day of the last day of the year. So if we close below like the threshold for the 41 or the $42 per barrel, I'm expecting to have a bit bullish movement to the oil, right? So that's why I would like to talk, and it's based again on the to take account for the spread between oil and gold. If you take a look on the gold quickly, it's the same observation here as I draw like a rectangle here for the this is the theoretical objective because this one here, this area was a range. So if we break this the top of the range here, we could accelerate into the 1,700 as I discussed. This here was the resistance that I talked to you guys for the 1,370 here. So I can draw the top here. Let's say, yeah. So this is the resistance here, the last resistance for oil, and after it will be, sparkling up to test like the previous lower. This level here could be an obstacle, but definitely when we break a resistance, we're going to test another resistance. But here could be if you're on the strategy to buy the top here and you're going to take this vacuum zone here, you could take a partially your take profit here and then still let the market a part for running for you until the next resistance. This is my personal scenario. So I already put some like an order and automatic order here. So if we doing a breakup, I will be executed for sure, and then going to test first part for the 1,550, and after going to test here, which is this 1,779. So which represented the first the first top on the 2011 and 2012. So very long resistance, probably 7 or 6 or 7 year, no, 7 or 8 year ago, right? So very critical level. All right, so this is done. So this is all the I think I completely forgot to show you some like also another study that I made. It's the ratio between emerging markets and the DXY observation. So this is a kind of to see when the dollar will be going down or even reinforce, the emerging market will be probably stay on the alive, because when the emerging markets are very weak. That being said, that the dollar is still higher, and when the dollar going down, which is our expectation, the emerging market could be prioritized by hedge fund manager. But the really the true the true fact of that is not just based on this the emerging market could going a nice vehicle for the macroeconomic investor, and I will discuss about that for the previous the true reason, like the really reason about that. But this is a ratio between the dollar, like a pair emerging market and dollar. It's still the same charts at the just the emerging market. It's just to see like the ratio and the proportion of the dollar to the emerging markets. So now we stay close to the average level, and if it's like the most of the we stay below that, we probably anticipating for the recession coming. But if we reintegrate and going on the top, could have a kind of stabilization, and then the market could going to doing a fund transfer on this market here. But I will get back to you again to the another financial broadcast about that, right? That's why I mentioned here. So it's a fact for the world trade and the battle between US versus China, for Africa and the rest of the world for emerging country, which will be the next topics for the financial broadcast for on the 2019. I will prepare that for you. So what to return for today for the expectation? We have studied the monthly bearish engulfing, and we saw also a bearish quarterly, which were like a failing, a sell-off pressure movement, and breakout for the leg 9 for the threshold, which is 2,610 and 2,530, right? So which is like represent for the 80 points. So as long as we stay below the 80 point, like based on the highest, which was 2019 was 2,940, and lowest point was also 2,345. So that being said, we lost around 600 for this year, so which is a very bad signal for upcoming for indices in the 2019. And the same thing as the forex on the euro dollar, which is the major pair, the most traded pair, which is the monthly MDS, as I mentioned, which is the morning doji star, on inverted from the polarity zone, so the resistance becomes support and vice versa. We have also the highest point, which is $25.50, and also the lowest, which were $1210, and so we lost close to 1,340 pips, right? So we probably on the like the best low possible that we can get, based on the fact that we're anticipating on the perspective that the dollar will be low with also the oil. So we probably see kind of a bullish movement on the euro dollar, right? It could be a bullish momentum upcoming. So that's why we need to very carefully with that, and then we frame the market. That's why we does. So but we have a very nice observation. We got a morning doji star, which is preceding a previous on this year like annual bearish movement. So it could be a great swing trading for you on the 2019. This is my own expectation for the spread between US and the EU for the 10 years. So the monthly bearish engulfing failure on the top below major resistance. That being said, the economic intervener starting to be to scare about the market. They're not going to get money, so to borrow money, but because they don't have like a nice perspective on the financial markets. So that's why I show you the with this study, this observation since an 87. So it has to be probably observation for 31 years. We saw that each time that the market collapsed below this resistance, we probably seen some like a shock of the economy. It could be macroeconomic data like damage with like collapse or the recession or financial crisis, right? And we observe also a dark cloud pattern, and also a monthly bearish engulfing, which is represented fairly on the top below the major resistance for the 3% here. So it's a kind of recession signal looming, right? And for the commodity, which is the spread between oil and gold, is a versus the most on demand, which is the oil, and the most safe on this kind of market condition. And we see also, you know what happened, as I said, and we saw also the monthly bearish Marubozu as I show you. So this is all my technical perspective and market projection for 2019. This financial broadcast is done today. And before that, I would like to let you go. I would like also to thank you so much for watching this video first and to support me through this year. 2018 were like an amazing day for me. As it was an amazing year for me. Sorry, and it's we done pretty much. We done a great job at the GSTA, and all the traders make a lot of money. So I would like to thank you so much for support me to support the channel. When you like the this video, when you share it, it's putting a boost. When we get subscriber, it's show that people that this channel, which were kind of considered as underrated, must to be like very popular and very, you know, very rated. And I would like sincerely to present also my best wishes for the 2019. I wish you that 2019 has to be for you an amazing year. You have to be like on the wealthy, healthy, prosperity, you know, be successful on any type of land. And for me was a great year for me in terms of the development for this academy that I run now. And I'm very happy to be with this academy, and is starting and still continuing to provide you guys a nice content and also nice study and research. So don't forget to going to subscribe again to our screen for our windows for the social media, you know, social media presence as Facebook, YouTube channel, at my website, the website of the GSTA, which is gstacademy.com. Please go in there to subscribe. And, you know, if you need to be framed on the financial market, if you want to be aware how to make money like me, this year was an amazing year for me. I made close to 89% on the financial market. February was my best month. When the Dow, you know, crashed a bit, I made 35%. So that's why, and all the analysis that I show you free is something that I did before when I was on the trading floor, and the people paying for that, but I give you free because I want that the like a retail trader must to be great on the financial market, right? So this is my my goal and my aim with the GSTA. So I invite you kindly to coming back to see me if you want to discuss about the market, if you want to be framed, if you want to know how the market works, and you want to make money on the financial market. You have the portal of the GSTA, which is, you know, there for you, and we'll still continuing to provide you a great content and frame you for success, the road of success. Thank you so much for watching this video, and Happy New Year if you didn't see each other. We see it in the next year. Take care.